Hello and welcome to Policy Watch, where we look at the year that went by and see what lies ahead in 2015. Let's first take a look at what happened in the markets and the broad economy. Before we get down to our guests, here is a report.
2014 was witness to a sea change in India's political scenario and also in the global markets, which in turn impacted the country's economy. Riding high on expectations, the Bharatiya Janata Party BJP achieved a clear majority in the lower house in general elections in May 2014. Narendra Modi became Prime Minister. He laid strong emphasis on reviving the economy and has set about large-scale economic reforms. He was able to shake up a supposed bureaucratic sloth in the country and implement his economic agenda at a time when global situation also favored India. Crude prices plummeted to $55 to $58 a barrel at the end of the year, from $108 a barrel in the beginning of the year. The fall in prices came as major relief for oil-consuming economies like India, who've experienced high current account deficit in previous years and consequent pressure on their currencies. India's stock markets also touched all-time highs this year. India's benchmark 30-share index BSE Sensex, which was hovering in the range of 21,000 at the start of the year, clocked nearly 8,000 points during the year to reach its all-time high of 28,822 on November 28th this year. Retail inflation measured as CPI has come down to 4.38% in November from 8.79% in January this year. Wholesale inflation measured as WPI has come down to 0% in November from 5.05% at the start of the year. Most importantly, food inflation also fell to 0% in the second week of December. The year-end also brought good news on the forex reserves front that are nearing the $320 billion mark.
Well, joining me now are Anup, Bagchi, CEO of ICICI Securities, and Brinda, Jagirdar, former Chief Economist of the State Bank of India. Thank you very much for joining us. Anup, let me begin with you. 2 or 3 key highlights from 2014 from the market's perspective as you saw it.
No, I think the optimism is clearly very, very high. I think globally also, barring Europe, I think US has sort of done well. And from Indian perspective, I think there has been a lot of luck, at least on the last calendar quarter, and crude fell, and we are the biggest beneficiaries of that. So I think all in all, a little bit of luck, a little bit of hard work, but overall very, very positive optimism. And I think,
are you also getting a feeling that the markets have now reached a place where the air is thinner and therefore further movement may be tough?
No,
as we reach the end of 2014?
I think it has to be backed up by earnings a little bit. But I think the optimism is such, and the optimism is such, and the way things are moving, it could be a big secular movement of 10, 20, 30 years. So to that extent, I don't think the market is undervalued from a longer term perspective.
Okay.
But yes, in the short run, there could be thinner air, as you are saying, earnings have to catch up and all of it. But, I think market is very, very positive.
Okay. So you're saying the 2014 is therefore the beginning of a much larger,
much larger, certainly.
Uptrend in the
certainly.
Brinda, internal and external, I mean the economy, what would you want to pick up first? What's the most significant development that we have felt or we have been impacted by?
I think the biggest game changer is the elections, the general elections.
Right.
That completely changed expectations and completely changed perceptions. Perceptions not just of what the world thinks of us, but even within the country. There's a new sense of optimism. I would agree with what Anup is saying now. A lot of optimism and a lot of hope. So I think that is one thing which is going to really play out.
So that's on the sentiment side.
That's one. The second, I think, is the big development is, I think, on the macro side, where we see the macros having stabilized. Growth is no longer sub 5%. After 2 years of below 5% growth, we see momentum picking up, 5.5% this year, and going forward 6-7%, moving towards 8%. So macros have stabilized. The current account, you remember we had 6.8% current account deficit at one point. So that is no longer a scenario that is going to play out now, under 2%. So current account has stabilized, the fiscal situation has stabilized. So overall the macro
So this sounds like the fire has been put out, if there was one burning.
Absolutely. There is a lot of policy credibility and there is certainty on the policy front, which again is very helpful and which will help the momentum going forward into 2015. The third thing I think is on the global side. Here it is not an unmixed blessing. Yes, the foreign crude oil prices is something very good for a country like India, which imports 80% of its oil requirements. But at the same time, the countries we export to, for example, Russia, Now, those countries, or the Middle East, so if there is going to be a loss of incomes in their countries, then I think that is going to affect the export demand also. And there is another view that petrodollars are going to be sucked out of the system. So something like 318 trillion would actually not be there, so it's going to impact global liquidity. So yes, we've had a lot of good luck where commodity prices and oil prices are concerned, but I think global risks have also increased on the financial side as well as on the geopolitical side.
So as we go into 2015, which of these two will have a greater play? The good news on the domestic front, or the somewhat not so good news on the international front, or the external front?
The good news on the domestic front will certainly have a greater impact, and that will play out more. But then the uncertainties on the global front, that is also something we need to be aware of.
Okay, so let's look at some of the other factors that cause concern, right? So manufacturing output is low, trade deficit, credit growth is low or lagging. Macro numbers have not been so good of late. Is that something that is of a concern as we go into 2015?
You know, macro numbers will improve as we see improvement in manufacturing, because that is the biggest laggard. That is what has dragged down the GDP growth. And manufacturing, I think we'll all agree, is set to move up with Make in India, with Digital India, with financial inclusion, with emphasis on infrastructure, emphasis on manufacturing industry.
But that's still a bet going forward.
Yes, so that is for the next year. So this theme we would see it play out in the next year. So
but you're saying that the preconditions for preconditions for growth or expansion are there.
Absolutely. Look at the ease of doing business.
Okay.
So we see policy changes which make it really, make it easier to do business in India and to help growth.
Okay.
So that is something which
so let me spin that what you're saying, Brinda, into how Anup sees it from his point of view. I mean, from a 2014 takeaway to 2015.
No, clearly I think there are 2-3 trends which I agree with her, but I will say that there is a part of the economy, where it is in a balance sheet repair mode. That there is a lot of debt, it has to be worked out, and working out of debt is never an easy thing. The balance sheet repair takes 3 to 5 years to work out debt. But there is another part of the economy which is asset light, the farmers, the ITs of the world, which continue to do very, very well. Certainly, from our perspective, we have to also see that reduction of oil and reduction of crude is like a global tax cut.
Correct.
To that extent, there is more money in the hands of people. So I think consumption will move up. On the other hand, the petrodollars getting sucked up or not incrementally coming in also has an impact on investment. That who is going to then invest, because the capital, it becomes slightly scarce. But net, I feel that it is going to continue to be positive. We see that on the ground, I think things have started to move a little bit. So that I think is only going to accelerate. Improve. The consumption part of the economy has started to move, certainly.
Right. So we're talking about capital, and capital is the key requirement for all our dreams and aspirations going ahead. So let's look at the debt and equity side. Okay. So let me begin with you. What's the debt side looking like?
Right now, with the interest rates expected to come down. They are still holding, but expected to come down sooner rather than later. So I think that side is looking good. But yes, I would agree.
What about the ability of banks to actually lend, the propensity?
That is something which we need to work on, because bank balance sheet, they have impaired assets sitting on their books, and it is difficult for them to recover. We still need a very strong bankruptcy code, and our recovery legal enforcement mechanism needs to be strengthened. So the ability of banks to expand lending, in fact, if you see the recent data which has been put out by RBI, most of the increase in credit has gone to personal loans. So, and corporates and banks are not talking about expanding lending to corporate sector, they are talking about expanding lending to MSMEs, to SMEs, to microfinance, to retail. Which
is also good and will pay off, but at a different level.
True, but then you asked, your question was about the balance sheets of banks. So,
so let's look at the equity side. How is that looking? I mean, both ways. I mean, one is flow of fresh money from investors and not necessarily portfolio money, and as well as the ability of companies to raise equity for financing.
So two things. One is, in India, most of the money which comes in from a FI perspective is emerging markets. So, there is just lack of opportunity. I mean, it's difficult to invest in Russia, it's difficult to invest in China. So from that perspective, I think we are fairly well positioned for that money to get in. That is number one. Number two, I think if interest rate starts to go down, then I think there will be shift on capital allocation towards equity side. So people will try and invest more towards equity because interest rates have gone down and all of it. then we are talking again of raising capital. Now raising capital so far it hasn't been growth capital. So there has been lot of QIPs, lot of fundraising, but it has not been for growth capital. Even the disinvestment is not for growth capital. So we are yet to see money getting raised for debt, for growth capital. It is all for either increasing liquidity, generating revenues, or just to repair balance sheet because debt is very high. Let me raise some equity, get the debt equity ratio under control. But however, if you see, there has been a lot of private equity money into growth capital. So I would say that the winner this year has been the e-tailing and the e-com space, which has got in growth capital. And that also is fundamentally changing.
Given what we want to achieve, I mean, as an economy as a whole and so on?
No, for the economy, see, we have to get investment back on track. Because our economy is so large, it cannot be driven only by consumption, there has to be investments in. But investments in, you have to repair currently what you have. Because we cannot forget that, we have now gone above 5%, and this is without a large amount of investment still stuck, not giving you a single naya paisa of return on that. So once that starts to move, I think that will be good. This whole issue about coal and e-auction, at least there is movement to resolve some of these issues. These are all contentious issues, land acquisition, contentious issues. I mean, everybody was thinking that it is going to get resolved overnight. Right. I don't think it's going to happen, but it is.
And that's a good point because they were we were hoping that a lot more bills will get cleared. I mean, more specifically, 37 bills were supposed to be debated and passed in the session which started November 24th. Only 11 have been passed. Insurance, coal, and Constitution Amendment, which is GST, have not got passed. So how do you see this, Brinda? I mean, is this going to be the break?
Before the bills, I'll just say that a lot of stalled projects have got cleared. So I think we should look at that also. I think about 55% of the projects that have been cleared are in the power and infra sector. So I think that is going to really be a positive in the coming year for growth. Coming to the bills, yes, a lot, that is something which has to be taken up on a priority basis because a lot of important legislation is stuck. And it's very difficult to move forward without clearance on these.
Right. Okay. So Anup, three themes that you are kind of looking at, betting on, hoping that something exciting will happen as we go into 2015.
No, I think the three things is we have to just debottleneck the whole policy around infrastructure so that all the investment that have got made that starts to give returns. Okay, because I think energy is going to be the next labor because it's a big input cost into everything. So I think if that gets resolved, I think we are on for a good thing.
Okay.
From a growth perspective, I still feel that interest rates coming down will be good because I think there will be more housing loans. I think people will consume more, and that again gives fillip generally to the economy and more importantly to the jobs, because jobs necessarily don't get created that much on the manufacturing because efficiencies are kicking in manufacturing process. So services industry has to support that kind of a thing. And third, I would say we have to fix this whole issue about what happens to the bank balance sheets, because if you don't put capital there, and we must not forget that we are essentially a lending economy. It's not a debt capital market economy, it's a lending economy. So you get lending from banks, and that is a big source of capital, debt capital. And so that bank, balance sheet has to be there. So for example, I think government must seriously consider, getting a golden share, still having some rights, but diluting and getting economic value out of the banks, because otherwise if you don't put capital, you cannot lend.
So if these three things are worked upon, or if they happen in the manner that you said, where do you see the Sensex going?
No, I think I think clearly a 15-20% return again over the 34-35 you got, I think is not far-fetched. But I am telling you, let me give you an example. Golden quadrilateral, when it started, for the first 4 or 5 years, actually no media picked it up as a big initiative. But if you see the large part of 2007 to 2004 to 2007, was driven by golden quadrilateral. It was driven by telecom.
Right.
So these are not the things which are picked up. So things that are getting done in irrigation, that you get water, you get electricity. These are compounding benefits over 20-30 years. And you will start to see this in the next 3-4 years. Those kind of things get completely missed out by the market. So,
but you're saying that you're seeing the kicking off of all these things, which is good. Okay. Brinda, last word. What are your 2 or 3 key themes that you're looking at?
I would agree. Implementation is the key here, first of all. The second thing I would say is the legal framework needs to be strengthened because we still don't have a bankruptcy code. It's very difficult to enforce the contracts, and so it's very difficult to expand business and to ask people to come and invest in India without clarity on that front. And the third thing I would say is in the infrastructure space, we have seen a lot of initiatives, like for example, banks being allowed to issue infrastructure bonds, the investment infrastructure trusts, and the real estate investment trusts. But I think what we need to have now is a separate bank for infrastructure, because IDFC did have a lot of specialization in this, but then now they've become a bank and they're going to take away all the infra assets also into the banking book.
Exactly like Anup's bank once upon a time. Yeah.
Right, exactly. So we need some bank which is going to look at the infrastructure development, at development in general and at infrastructure in particular.
So also for skills and so on, and capability,
yes.
not just the money, which of course is one part of the problem.
More importantly, for the skills and incubating these projects.
Right. So 2015, I take it from both of you, is looking fairly optimistic.
Oh, yes,
and,
yes, of course.
Yes, resounding yes to that, and with a few things obviously falling into place, and both the internal and external sectors looking quite comfortable as we stand. That's all we have time. We'll be back on the other side of the break, where we look at what industry wants and expects from 2015. Stay with us. Welcome back to Policy Watch. 2014 was a somewhat tough year for Indian business and corporates, but things started improving towards the latter part of the year. We saw some interesting developments, particularly in the context of e-commerce, and also inflation coming down, as well as commodity prices falling, could be seen as good news. How much of this will spill over or take over to 2015? Well, let's find out from our guests, Arun Nanda of the Mahindra and Mahindra Group, and also Indrajit Gupta joining me here, a journalist and former editor of Forbes India. Thank you very much for joining us, Indrajit. Mr. Nanda, let me begin with you. From your point of view or your vantage point, what are the key highlights for 2014 that you felt were important and in some ways game-changing for Indian industry?
I think the most important was that after a long time, we have a government which is stable, aligned with the states, and a desire, a very clear desire to achieve certain things, including getting India as a pre-player in the international market. The positives that we felt on the ground was a reduction in inflation rate, coming down to near zero towards the end. We saw a feel-good factor coming back to the industry. We saw signs of good governance, very clear messages being sent out that the Prime Minister wants honest people, he wants doers, he does not want people who are just there for their past loyalty. We saw all that happening. On the industry front, we saw that there is a desire to see to plan for the future. The feel-good factor started coming back. Although we didn't see much results till the end of the quarter, yes, the e-commerce space saw some things happening, but basic industries did benefit for cost reduction, the oil prices coming down, a promise that there would be a good future, but we are still hoping for 2015 to happen.
Right, and I'll come to that in a moment. Amongst the other questions that many people have, of course, about 2014 is the quality of industry's balance sheets, the ability of industry to actually build for the next round. Not all groups, including yours, may be as badly affected, but what's your sense? What's the health of corporate India like after this year?
I would put it in three buckets. I think the traditional industries are not so bad. But when it comes down to companies which went on a massive acquisition spree, and I don't want to name, some of them went on to buy iconic companies across the world or just buying, I think they have a problem, because the international markets have not improved the way that it is. Europe is still not showing signs of growth. Rupee has depreciated considerably in the last 3-4 years, and they are going to see pain. Also in that bracket is the infrastructure companies with this coal block. Now, of course, we have an ordinance, the power sector not taking off, those companies, ports not taking off, ports not getting enough traffic. All these companies will have to go in for fresh capital raising to reduce their debt, because I don't see, even if the banks help them at this stage in rescheduling their debts or things like that, but I don't see them paying their debts out of their earnings in the near future. Everybody thought that they'll raise new rounds of funding. International funding is not, everybody is looking and watching. The third sector is the e-commerce sector, and honestly speaking, because of my age maybe, I find that there is too much of private equity money chasing to support, subsidizing the customers. There are no real assets being computed, and I hope these things will not lead to some sort of a fiasco, because they've not been able to keep up with the logistics. You saw that in Diwali time, and I think lot of money has been sent on subsidizing customers and creating hype.
Right. So, Indrajit, I know that you're someone who sees as the march of the e-commerce thing as a good thing, but I mean, we'll come to what Mr. Nanda is saying. Tell us about it.
Well, I think it's really in some ways signals the arrival of China and India on the global e-com map, especially if you see the kind of eye-popping valuations that Alibaba got, and then Flipkart, of course, Snapdeal. So it's very clear that Silicon Valley is willing to, I think, bankroll e-commerce plays, large ones at that, in this part of the world. I think in some ways they're going to challenge established models very clearly. And it's not just, in some cases, these are global models like what we saw with Uber, and the kind of setbacks that it faced in markets like India and around the world, where they're challenging established monopolies. The taxi trade is an established trade in the world, and it has an implied monopoly.
2014 therefore saw the kind of immersion of all these new models in our marketplace.
I think so. I think this was the tipping point.
To cope with it.
Yes.
Including obviously incumbents as well as regulators.
Absolutely.
Right. What about, I mean, what did you sort of, as you scan the corporate landscape, what are the interesting things that you picked up? Transitions, for instance?
Two, I think particularly. One was what happened at Infi, because here was an iconic company which was kind of had the reputation of being extremely well managed, led by founders, a set of founders who were in their own right very highly regarded. That transition there, I think, was a bit of a surprise, led to in my understanding, by the growing power of institutional shareholders who are demanding that managements be a lot more accountable for performance, and the entry of a global manager like Vishal Sikka is in some ways an interesting development there. So that transition, I think, is very interesting, because very rarely that promoter groups kind of leave organizations that are in some ways not delivering on expectations. This was one case, and it to happen at Infi was surprising. Sure. I think the action that we saw against willful defaulters, Vijay Mallya, all the action against Sahara, DLF, Jignesha, seem to suggest that I think government and regulators want business to play by the rules.
And the courts.
And the courts, particularly. I think they've taken a very tough line for the first time. And I think we're hoping that there'll be more action on that front. So I think it's a good start.
Right. So two important points, I think. So one is the Infosys example, and the other, of course, is saying that the system as a whole has become more alert and less forgiving. Mr. Nanda, how do you see it? I mean, has the system become more alert, or has it kind of, as some businessmen would say, has it become too strict?
No, I would say I'll agree with Indrajit, it's become more alert. But I think what we need to see is that the regulator should play the role of a regulator and not a rule maker, and judiciary should interpret laws and not make laws. I think sometimes they do cross the border, and we've seen that in some cases that things like SEBI sometimes, instead of regulating, trying to lay down rules, that majority or minority, for example, much before it came in Companies Act. So there are issues which need to be done, but I must say that today people are more alert, and I am hoping that that will bring in more discipline and better governance, because people now know that they cannot get away with what they used to in the past.
Let's look at 2015 very quickly, Mr. Nanda. So what are the 2 or 3 themes that you're looking at? Maybe in some ways going onwards from 2014, but what will in some ways drive either the performance or the health or the future and growth of corporate India?
Not in the order of importance, but we definitely want to see the interest rates come down. We would like to see all the actions that were initiated by Mr. Modi at the PMO level being translated into action at grassroots level, whether it is the district collector's office, whether it's the town planning office, whether it is the income tax office or anybody. We really want to see that good governance is good governance. You will not have the license Raj people coming and bothering you just for sake of things, which is clearly the mandate and the intention of the government. The third is we would like to see the feel good factor coming up, because lot of things which have been promised to encourage, say make for India is one of the things that they are saying. They will make processes faster, they will get infrastructure into place. They brought for the first time in this cabinet a non-BJP member to head railways, because he means business on these things, and we would like to see results of all that he has initiated percolating down into consumer demand and ease of living for the common man.
Right. Indrajit, your last quick themes for 2015?
Two things. One is really around investment demand and what will it take to kind of get that back on stream. I think the key issue is really resources. I mean, clearly private sector balance sheets are clearly stretched, so the state will have to play a role. Now the issue is, where will the state get the money to match the aspirations that they've set? They're talking about smart cities, they're talking about bullet trains and a whole host of other infra plays. I think that needs to be watched, whether we increase the cess again or find some other ways, because clearly income tax yields are not going to be as high as we thought it would be, with the growth being what it is. The second one really is around, to my mind, the ease of doing business. I think Mr. Nanda alluded to it.
Yeah.
I think it's time's come to attack that, especially if business has to invest both foreign capital as well as domestic capital. We've got to create, otherwise you'll have situations where entrepreneurial startups set up shop in Singapore and elsewhere and not set up shop in India. That's a real tragedy, and that needs to be addressed very quickly by, I think, single window clearances, speedier, kind of.
And particularly at the local level, which is where most of the friction
absolutely,
is.
Absolutely.
Right. So great. So I think 2015 looking good to you, Indrajit? Just
on the whole, yes. I think.
Mr. Nanda, one word. Is it looking good, or are you cautious, or?
I would say I am optimistic.
Great. So both of you looking at it optimistically, but a lot of things need to be done. A lot of policy action has been defined, but we're obviously waiting for execution on ground. That's all we have time for. Wish you a happy new year ahead. Thank you very much for watching Policy Watch. We'll be back next week, same time. Goodbye.